Alright, hope everyone's having a good evening. So, typical day, coming into today, yesterday was a sell signal on the daily chart. Nope, wrong chart. There we go. Yesterday was a sell signal, failed to break below it. Today closed higher, so now we have a low 2, but a bull bar, so it's lower probability, and it was already a low probability trade as it is. The reality is more likely than not, we're probably going to fail and come back into here. Now, I still think we're going to close this gap, but it's lower probability now. Today we tried to form a double top. Arguably it is a double top. You can call it a lower high, double top, bear flag. Bears want the bear breakout and a measure move down. Something like this. 5-minute chart, more of the same. Again, bears they first wanted a double top with here, measure move down. Now they want a double top with here, measure move down. Doesn't really matter. They just want, they want something up here to be a top. Left shoulder head, right shoulder, lower high major trend reversal. Doesn't really matter. Alright, so coming into today, let me do always in real quick, just real fast. So, arguably always in short on the close of 1, but higher probability to wait for the close of bar 2. When bar 2 closes like that, always in short, stop up here. Do bulls get out above? Probably not. And 3 bars down, first left should fail, tail on top, tight channel. And we may test 60-minute moving average, yesterday's close. So we may get a pullback, but bad follow through on the tail. So when you see this, failed to close, we closed at this low and not far below. Let me grab some water in 1 second. Tails on the bottom here, not good, not a good breakout for the bears. Failed to close below here. Bad follow through, big tail on the bottom. So when we get this makes me think that we're going to get an opening reversal. Maybe test the open of the day. So, I think bears definitely get out of shorts above here. Note we're clearly always in long on this bar. If a trader was smart, or if they understood what was going on, I think a lot of traders would get out at these lows. Betting that we're probably not going to test down to here without some sort of deep pullback. Normally, when you're in a tight channel and you get this, it's usually, it's happened the other day, kind of like here, big bull bar, but here it's different, tight channel, we tried to break, we're trying to test these highs, and then we get bad follow through, and right here is kind of where the bears lost control, the bulls lost control. They buy the closed bulls trying to get out. Here it's different because lack of strength by the bears in the first place, and it didn't have the look of a strong trend. Not really no real good consecutive bear bars, so probably always in long, buy for any reason. Here again, buy the close, bulls will buy this close, so always in long, buy anywhere, stop down here. Do bears get out up here? I don't know. That's if a bear does get out below one of these bars, and I don't think they have to, but I get the logic. Micro double top, up down. You have buy the closed bulls trying to get out. It's reasonable to get out below, but since the buy the closed bulls were unable to get out, I think we'll retest it. Are we always in short down here? Probably not. I think if a bear did not get out over here, especially think they don't get out over here. Sorry, if a bull did not get out of here, they especially don't get out over here. Too close to the moving average, probably buyers at the moving average. So if I was long and I held long, even if I bought this high tick, if price is right here at the moving average, I'm going to keep my stop at a minimum somewhere down here. And I'm going to get out if we break strongly below the moving average. But You know, as long as we're holding above the moving average, then it's a bull trend, possible second leg up. If the bulls are lucky, maybe they'll get leg one, leg two, but again, probably won't get it. You know, this rally is not all that strong. It's also parabolic, so for the bears, well, here, let me finish up always in. Always in short, bears buy back, always in long. Bulls either buy above here, aggressive bulls do, or they buy the close, maybe this bar, one of their 3 bars. Bears maybe get out, bulls maybe get out, aggressive bears short, but you know, I probably would not. I think it's better for the bulls to stay long. Do they get out anywhere over here? Really not all that simple. Hard for bears to make money. I think they clearly get out here. You have a small double top within a tight trading range, so you know, one of those. So we had it yesterday, double top, 2 legs down, so that's possible. So I think a bear would get out. You know, tight enough channel down, strong enough channel down, even though it's weak, that will probably get a second leg down. So maybe aggressive bears sell, or you know, they wait to sell this close somewhere in here. But you know, do they get out above here? Maybe. You know, aggressive bulls buy, or they buy this close. You know, for the bears, maybe they get out above here or on this close. However, if any bull that's buying in here has to get out below here because of the odds of getting a second leg down. So if a bear gets out of a short, they get back to short here. If a bull gets out of a long or gets in long here, they get out here. Or bears wait, sell above this bar maybe, but getting pretty late in the day, and then I'd take profits above this bar, 2 legs down. Back to what I was saying over here, parabolic wedge, 1, 2, 3. And this is why it's dangerous when you don't have consecutive strong bull bars. It's dangerous because number one, this is consecutive bull bars, but at the top of the move, so it's climactic, and we may easily test down to here. Second, there's the risk of a parabolic wedge. So 1, 2, 3, and then you get a small pullback trend. Even though this high, it looks like this high, even though this high went 1 tick above, it's still basically it's still a micro channel. And the bears, they want to see this and then this bear breakout. But compare this to today. You know, we didn't get that. We had a micro channel, so it's reasonable to sell. However, if you're betting on the parabolic wedge, which you are, in the bear breakout, you know, number one, usually the bears get consecutive bear bars, which they did here, but you know, normally when you see this breakout above this micro channel and the test back down, the game's over for the parabolic wedge, and we're probably going up. So you know, that's why if a bear went short, you know, maybe they hold above, but if they do, they've got to get out above here. Bulls probably get long again. So you can see the case, it's far different here. And then it's clearly always in short for here, somewhere in here. Find more of these. So here's another one. This isn't really, it's basically a parabolic wedge, but we just win. There's only 2 pushes up, so 1, 2, and sometimes this happens. 1, 2. It could have been 3, but instead we just got the tight micro channel sell off. You know, other traders, they just call it simply a opening reversal of the moving average. Doesn't matter what you call it. You know, the logic is there. It's a bear breakout, pull back to the moving average and a sell off. You know, this also points out a good case. You know, just because you break above a lower high doesn't mean it's always in long. Trending trading range day, upper range, lower range. We went back in the upper and got the strong bear breakout below. So if you're buying up here, you have to be careful. You can argue higher low major trend reversal, bear trend line break to a new low. However, when you get a 20 gap bar short, first bar fully above the moving average, 50-50 chance you sell off. So kind of dangerous. Have some better examples. Here we go. 3 pushes up, very tight bear channel. And this is again, this is the risk of it's parabolic in nature. You don't have a strong spike and channel. It's basically what it is. 3 pushes, 1, 2, 3, spike pullback channel, but bad follow through on the way up. And then when you get this, you have to be careful of endless pullbacks, just because even here, first push, second push, third, we sell off, pull back, and then we sell off again. By the way, some of these are Al's charts I got from his trading room, but that's not really. Anyways, 3 pushes up, tight channel. Bulls tried to resume, failed. They tried again here. Here, the Bulls clearly gave up. Tight channel, Bulls gave up. Here, again, this is more like today. 3 pushes up. The Bears tried to get a parabolic wedge, but they couldn't. We got to the moving average, they failed, and then we started rallying up. Here we formed a small pullback trend, lots of bull bars. So that's what the Bulls really were trying to achieve over here, but they couldn't do it. So, and also the trend up was stronger on this day. So, when we get this parabolic wedge and then we go sideways, the fight's over. Trend resumption, trend reversal. And to really get the strong breakout, leg 1, leg 2, Bulls need consecutive bull bars, and they couldn't get it. Let me look at this day real quick. Again here, a weak rally, but 3 pushes up. Tried to break out even stronger above yesterday's high. Got bad follow through. Once you get 3, 4, 5, 6 bars, then it becomes a problem. And we're close. You have to think we may get to the moving average. And if we get there too quickly, we may even get something like this, which we can't close. So looks like more computers saw this right here. And yeah, so you get the bear breakout, but weak follow through. But micro channel first left should fail, and possibly 3 pushes down, 1, 2, 3, wedge bottom, 1, 2, 3. So but when you see the bears make money, bulls make money over here. When we get the 3rd push down, consecutive sell climaxes, a lot of always in traders get out. So if you want to know always in on a day like today, arguably always in long, but expect an opening reversal. Bears probably, bulls get out. Bears, aggressive bears, they sell somewhere here. The rest of the bears sold on this bar or on this close. They get out here, aggressive bulls buy. They probably don't get out here. Tight enough channel, second leg up likely. May test the open of the day, which we already did. And bulls, they probably get out above here. Consecutive wedge top, 1 double top, breakout above a double top, breakout above the top of this channel. We failed. 2 legs up likely. We got that. So if they don't get out below here, they probably get out below here, or above this bar. Probably always in short. First reversal up should fail. Do the bulls get out above here? They can, but I think it's still probably a second leg down likely. And then bears, if they got out, they get back short again. They sell somewhere over here, and they probably get out maybe above this bar or on the close. But again, that's what parabolic wedges look like, tight channels, and then bear breakouts. So this is the path I think that we're taking, except we don't have this, and if we're not getting this, if we get this, different story. And you can see what happened. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars, bull bars in a row. Then we got this right here. Again, go to slide 25, and Al's new course that he's put on his trading course update. If you've purchased the prior one, slide 25 of his buying pressure, and he talks all about it. It's a really great course. So far, I've seen some of it, and I'm sure it's going to be an amazing course when it's completely finished. So anyways, let's get back to today. So, when you get this, you've got to be aware of the bulls get out, give the bears a chance. Bears can't do anything. The bulls get long again. But the problem is bull bar, bull bear, big bull bar, dojis, another bull bar, dojis. So at some point, maybe a 1 in 3 chance, maybe less than that the bulls get their bull breakout. At some point, the game's over. And that was right here for the bulls. So most bulls get out, and strong enough breakout for sellers above, but again, there's lacking of consecutive strong bear bars, so making a deep pullback. And the reality is, even if we went to a new high, we probably would have turned down and sold off more. So, reasonable short, but again, not that strong. Tested the bottom of the channel. I wonder if this is the blowbacks session. Okay. Yeah, so just what I figured. A lot of times when you're in a trading range, here is the open of the day. Usually if you do something reasonable, such as, trading range behavior, we get the bull breakout, measure move out from the low to the open, projecting up here. If you sell up here and you basically do this, I don't want to confuse everyone, but so you have a measured move from this low to the open of the day going up. Trading range day, you bet that price will close somewhere in the middle or get back to the open. At some point, you sell here at this bar, which no surprise, we vacuumed up to it. You put your stop up here and you put your target at the open. And maybe you sell up here. Look what happened. We eventually got back to that price. And that happens a lot in trading ranges. Here's a bunch of charts I look at just kind of off and on. Crude oil was interesting last night. So we've been in a bear channel, but eventually look what happened over here. 1, 2, 3, 4, 5, 6. 6 out of 7 bars are decent bull bars with the close above the prior bar except for here. So probably strong enough for a second leg. Here, pretty strong buy climax. So any bull that bought here, probably going to get out here. It's a gift. We may test this low. So I think a lot of bulls, if they're smart, they just exit the market here or below here or here. Let me see something real quick. Yeah, so, measure move based upon this, maybe based upon the middle of this range right here. So I think if I had to bet on anything, I didn't do anything over here. It's just kind of stuff I observed. But I think we'll get, it's kind of interesting. I think we'll get to this low. Maybe this low. But, right now, I think we'll get a second leg. If the bears are lucky, they'll get that. But reality is, I think there'll be buyers at the moving average and more sideways. All right, so that's about all the time I have. Comment below if you have any questions, and hope everyone has a great trading day tomorrow.